Hey Bowtie Nation, Joseph Hogue here with 5 stocks that will make you more money than your job, surpassing your income. And I'm going to show you how to do it, investing just $1,000 in each stock. And this is possible. Some of these stocks I've held longer than a year, but there are more that we've found that have produced those triple-digit returns and tens of thousands of dollars in profits. I started buying shares of SoFi Technologies March of 2023, adding up to over 25,000 shares at an average $6 each. By the end of last year, when I took this screenshot of my account, I had made 161%, a $242,000 profit, and that is just one stock. Others here buying Palantir since June of last year, less than 8 months ago, for a $60,000 profit, and SMCI, a position I just started building 5 months ago, now up $109,000 on those shares. Nation, when I think of how much money I made my entire 4 years I was in the Marine Corps, not even $55,000 in base pay for all 4 years. You see here the monthly pay chart back to 1999, the year I went in, making less than $1,000 a month in boot camp. And even by the time I got out as a corporal, only just over $1,300 a month. Now I make more money on my stocks in a month than in my entire enlistment. But then again, I don't get the free haircuts either. But even if you're making the median personal income right now, that $42,000 a year, it is possible to replace that with the 5 stocks I'm going to talk about. And more importantly, with the plan I'm going to show you in this video. But I'm also not going to sit here and blow smoke up your ass. Nation, YouTube investing channels have gotten lousy with these over-the-top promises, and when I started seeing videos like $75 in these stocks will surpass your full-time job, I had to call bullshit and protect you out there in the nation. And it's not that some of the stocks in these videos aren't good investments. In fact, I'll be talking about a couple in this video, but in that mad chase to make the most insane claim and get those views, investing YouTubers are setting you up to lose money. Because just graphing this out, and you see it is as ridiculous as it sounds. To invest $75 in a stock, it would have to grow by 102% a year over 10 years, a 113,000% return on your money, and continue to keep doubling every year for you to replace your income for the next 30 years. But then those YouTubers promising you those rainbows and unicorns never get to that part. They hook you in with those fantastic but totally ridiculous titles, telling you which stocks to buy, but then ignore the fact that it is impossible to turn $75 into a stock into a full-time income. I half expect to sign up for their Patreon and see them selling magic beans. Hell, even Monster Beverage, arguably one of the best performing stocks over the last 2 decades, has only produced a 25% annual return. And Tesla, up to its peak last year, had only produced a 41% annual return, well under that 102% needed. And Nation, by suggesting you can replace your job with just $50 or $75 in a stock, it's beyond bullshit. It's just plain negligent, and worse than putting you in the riskiest stocks without any real analysis. By setting that expectations that a $75 investment is going to replace your job, when you lose money, you think it's your fault. You will lose money, you're going to stop investing, and never get the chance to have your money work for you. These YouTubers are going to keep making these impossible promises. Now I want to get to those 5 stocks and the real plan to replace your income. You can tell this is a sore spot with me, and I know you're frustrated. I know living paycheck to paycheck blows because I've been there, and it would be great to think that that $75 in a stock is going to make you rich. But folks, I've been in this game a long time. First started investing in '99, then working as a professional analyst and venture capital analyst for a decade. I was investing in Starbucks when most of these yahoos were still working there. I understand the game YouTubers have to play, being over the top exciting to get those views, but there is a line, and the promises in some of these videos is going to set you up for failure. So if you're ready for a real plan though, I'm going to show you 5 stocks and how much to invest to replace your job. Our first stock here and plan is with Symbotic, ticker SYM, one of my favorite growth stocks right now. Symbotic fell hard on its recent earnings because sales only increased 35% over the last year. It's a perfect example of the market getting greedy and selling off an excellent long-term growth stock on those impossibly high expectations. But here, if you're looking for a super normal long-term growth stocks, this is it. Symbotic is using AI-powered robotics and software to automate warehouse and logistics with a 4-year development partnership alongside Walmart that alone could send revenue booming higher. Just installing its robotic systems into warehouse operations is a $432 billion market, with the operational side another $500 billion. The company recently acquired Walmart's robotics business, which means it's going to be developing the world's largest retailer's warehouse and delivery robots, pretty much making Symbotic a subsidiary of Walmart. Forecasts for $2.3 billion in full-year revenue are a fraction of the company's $23 billion project backlog, which has actually likely increased another $5 billion on that Walmart robotics deal. So here you have a company with a project backlog, so booked revenue for the future, and a locked-in buyer in Walmart, enough to grow revenue at a 30% plus rate for years to come. And that is what you're going to need to replace your job. This is the plan, investing $1,000 a year for 15 years in a stock that produces a 28% annual return, growing your portfolio until you retire, and start taking out that $42,500 a year out in the year 15 and beyond. And I know I just lost half of you because nobody wants to wait 15 years to live off their portfolio. Hell, 15 years is a complete Marvel reboot and 3 new iPhones that look exactly like the last one. But folks, this is a real plan. This is the way you replace your job instead of going broke on some YouTube promises and wonder what went wrong. With each of these 5 stocks, I'm going to show you how to reduce that time it takes down to just 5 years for our last stock. But this is where you need to start with a real plan. And I've started with Symbiotic because I believe it's got that long-term growth that we need, growing at a 30% annual return to build your portfolio. Now, another stock for this long-term plan is IonQ, ticker IONQ, up 254% in the last year alone. But there is a reason this needs to be a longer-term investment. I highlighted IonQ in December as one of Amazon's biggest investments, with the e-commerce giant holding just over 1.9 million shares, worth about $57 million, or about 1% ownership in the company. Since then, the shares of quantum computing stocks have jumped, with IonQ positioning itself to be the leader in the space, that next generation of processing speed, in a market it estimates worth as much as $850 billion by 2040. Long seen as a fantasy, quantum computing uses the laws of quantum mechanics to solve problems too complex even for the most advanced computers. In basic terms, it's computing power that could be 100 million times faster than a regular chip. But folks, we are still extremely early in this technology, and even a leader like IonQ isn't quite there yet, though it does have some smaller scale products. While revenue is expected to surge 99% this year, it's only at $83 million in sales, so this investment is also very much ahead of its time. That means those quantum stocks have probably gotten ahead of themselves on price, so don't expect a smooth and easy ride higher. That's why this fits with my 15-year plan, giving you opportunities to buy in every year and build your portfolio through those crashes and the booms, because long-term, this is going to be the stock to own. We're just getting started, and next I'll show you how to cut that time to retirement almost in half, but I want to show you what we're looking for in these stocks. Because, nation, if your whole investing strategy is just waiting for some YouTuber to tell you what to buy, well, it's not much of a strategy. Folks, you need to know what to look for, at least how to verify what you hear about these stocks on YouTube so you can make sure you're getting the right stocks for your goals and your portfolio. And first here, we're looking for growth sectors because that's the idea here. Looking for those growth stocks that are going to produce 30% plus returns a year to replace your income. Trying to retire in less than 5 or 10 years, you're not buying that diversified portfolio with a little of everything. Shares of utility companies may have done well last year, but the sector has produced just 2.7% annual return over the last 5 years. And that's why we're starting here looking at these sectors. Will there be high return stocks in every sector? Yeah, of course. Hell, shares of Vistra Corporation in that utilities sector are up over 600% in the last 5 years. But for the most part, you're not going to see those 20 and 30% annual returns that you need in some of these sectors. And why I start with this top-down approach, looking at the sectors first instead of going right into the stocks to buy, because it's a hell of a lot easier to find the stocks that's going to do that 30% a year if it's in a sector that sees faster growth like technology or communication services. Now from there, you can drill down further into the themes within that sector that are going to drive the most growth over the next decade. This isn't about just jumping into the market's love for AI chips and NVIDIA. That was 2024, and apologies to the NVIDIA investors, but the stock has done nothing since June of last year. Yes, the chip maker should continue to do well, but it's not going to be the growth that we saw over the last 2 years, and it isn't going to be the growth that you need to surpass your income. For those growth themes, we need to follow that AI trend through to the supply chain, into the infrastructure and the software that's going to be the next growth phase. The last step here, before getting back to our list, is finding the leaders in that supply chain, and through those trends, the companies with the competitive advantages over their peers to take their market share, to not only eat a share of the growing pie, but to greedily take pieces of that pie from their competitors. Now, is using this process more work than just clicking on some random video telling you which stocks to buy? Yes, but again, your strategy cannot be just watching YouTube and guessing which stocks to buy. Nation, investing in individual stocks is not about guessing. That's what 90% of investors do, and from what I've seen, at least 99% of the so-called investing experts here on YouTube. Just picking through a list of stocks everyone is talking about it is going to get you the market return at best, and more likely, it's going to lose your money with the rest of the herd. So what I'm trying to get you to do, drag you kicking and screaming into it, is take the guessing out of your investments. To start with that higher level facts we know, what sectors produce those higher returns, What are the growth themes within those sectors, and which companies are the leaders in those themes to produce the kind of long-term, durable revenue growth and returns? Back to our list and a shorter 10-year plan starting with Zscaler, ticker ZS. Zscaler is a great example of the process we just looked at with cybersecurity and my favorite big picture trend over the next decade. With a 20-fold increase in malicious programs just in the last decade and 10 million people affected in 2022 alone, cybersecurity is already a $116 billion addressable market. Now with AI transforming the threat landscape, making attacks easier, the market is expected to grow to $250 billion by 2029, 21% annualized growth. So here you've got that huge growth industry, and then drill down into one of these leaders. Zscaler changed legacy cybersecurity from a network and firewall architecture to a zero trust model in the cloud, and that first mover disruption accounts for its amazing revenue growth. Here I also like its recent tie-up with CrowdStrike. The two are launching a new set of AI and zero trust integrations into CrowdStrike's Falcon software to coordinate their threat sharing, detection, and response. Now, Zscaler's Zero Trust Exchange and CrowdStrike's Falcon software are each company's competitive advantage in the industry, and combining them, I don't think there's another company that can beat that. Looking at the 7 largest cybersecurity stocks, and I own quite a few of these, but Zscaler has the growth that we're looking for, having produced a 47% annualized revenue growth, and is one of the less expensive in the group. Now, replacing your job in 10 years instead of 15 is going to mean investing more, but I don't want you putting all your money in just one stock. So here the plan is invest $1,000 a year in each of these first 3 stocks. Each are high growth names, and assuming a 31% annualized return gets you to that point in 10 years where you can start living off your portfolio. Stick around though, because these next 2 stocks are growing just as fast, and I'm going to show you how to shorten this further to just 5 years. But I want to get your input here as well. What's the most ridiculous get-rich-quick stocks advice you've heard here on YouTube? Drop it in the comments. I'll post some of the ones I've seen as well. We're going to roast some bad advice together. Sport Radar Group, ticker SRAD, is one we looked at before the Super Bowl, one with what could be surprising growth ahead of it. And here again, we're starting with a growth market, and while I've focused on the US sports gambling market in that video, a market that itself is expected to double over the next 3 years to $50 billion, the bigger opportunity here is in the international market. And that's where Sport Radar has the edge over US-focused competitors like Genius Sports. Through game feeds, the company collects and provides data analytics, leveraging that content to sell to media companies, and then back to the teams as well to drive the engagement and customer acquisition for sportsbooks. It's inked deals with nearly all the major leagues apart from the NFL, including 400 leagues and 90% of the sportsbooks. Michael Jordan was an early investor in the company, founded in 2001 and producing 450,000 live streams a year, a broader depth of coverage than we saw with Genius. And what's interesting here is Sport Radar is much more internationally driven, aggressively buying the content rights for sports in other countries. So as media companies want to expand internationally, they find they have to buy the licensing rights from Sport Radar, driving a 78% foreign revenue. So what we'll see as that growth in the US sports betting market starts to slow in a few years, it's with Sport Radar that you're going to see that more durable, longer-term growth with the bigger international market. Getting to your private island retirement in just 5 years is going to mean investing $1,000 a year in all 5 stocks, but also boosting those returns. And this next stock has the highest upside potential return, but even that may not be enough to retire in 5 years, so I'm going to be using an option strategy to boost those returns. Option investing might sound like a foreign language, but it's your best tool to not just increase your returns, but also lower risk and generate income. And that's why I'm relaunching my Ultimate Options course. Over 3 hours of video, I start you with the basics, then walk you through 29 option strategies, when to use them, and how to set them up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly how much money you'll make. Right now, I'm relaunching that course with a 38% discount. Save $150 off, but only for the next 3 days. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you'll make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. That $150 launch discount is only available with the coupon code in the link I'll leave in the description, so look for that link or scan the QR code here. Our 5th stock is Advanced Micro Devices, ticker AMD, and I know this chart looks butt ugly, but there's a lot of value trapped in these shares and a way to unlock that value through options investing. Now, Wall Street was disappointed in last quarter's earnings, but the company still managed to grow sales by over 40% over the last year, with that all-important data center segment growing at a 69% annual pace. The company is launching its 350 series upgrade this year, which is going to feature a 35x performance boost, and news over the past couple of months is showing big customers like Dell and IBM signing deals for their chips. As for NVIDIA's 90% market share in that AI chip market, Folks understand that this is for the intense compute power needed to train AI models. We're already seeing a shift into inference, which is using those models and requires less compute power, potentially moving tens of billions of sales over to AMD, and it's less expensive chips. Now, I've covered the growth thesis on the channel quite a few times, and it's my highest conviction stock, a company growing revenue by 20% plus a year with shares priced at a huge discount at just 5.4 times this year's expected sales. That's about a 40% discount to the fair value already. Then you add in that 20% annual growth on top of it for years. But here we need a 50% plus return on our 5-year plan, so we're going to need to use options investing and the synthetic long strategy to get that leverage and your return to 10x. There are a lot of bullish strategies, and we could just buy the call options, but I want to highlight the synthetic long strategy because it's one most investors don't know about, but is a great alternative to buying the shares. You do this by buying a call option and then selling a put, which I'm going to show you with an example next. And the beauty here is, you see in the graph, it is the exact same payoff as buying the stock, but at a fraction of the cost. I don't want to go into all the basics of options investing, but again, the way the synthetic long works is the same exposure as buying the stock. You just get a higher leverage for less. It's enough math to make Einstein blush, but think of it like renting a house with the right to buy it at today's price. You're renting for just a few thousand, but have all the upside and the tens of thousands in appreciation. Trying to buy 100 shares of AMD would cost over $11,000 and is out of reach for most investors, but this strategy is going to give you the upside on those 100 shares for less than $1,000. We'll use the long-term January 2027 options to give you the stock the time to prove that upside. And using these $115 strike call options, we can buy a call for $30.35 each, and then sell a put option at the same strike to collect $23.45 a share. Now that means our cost per share is just $6.90 each. Instead of paying over $111 a share for AMD, we're getting 100 shares for just $690 total. And here in the calculator that comes with the course, you can see the payoff. My 1-year target on AMD is over $150 a share, but even if it takes till January 2027 with the stock at $160 a share, you will have made $3,752 on that $690 investment. That is a 443% return in less than 2 years, an annualized 142% return, more than enough to put you on that path to surpass your job. Get your $150 discount on our options investing course only with the special coupon code in the link below. You're going to get that strategy finder so you know which of the 29 strategies to use and the options calculator to show you exactly how much you'll make. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.